The car market has collapsed. If you've been waiting to buy a car, this info is for you. Right now, we have the most repossessions we've ever seen in US history. 1 in 5 loans do not get approved. The average American has $7,200 of negative equity, and the car dealerships are getting wrecked. So, it was smart to be patient. If you've been wanting to upgrade to a new car, or if you need a secondary vehicle, there's 2 things you need to look out for here. See, dealers in 2021 and 2022, they were able to get away with these prices because they had good, low interest rates. We don't have that right now. However, if you're looking for a new vehicle, there are a lot of manufacturers that are offering 0% or up to 1.9%. That's a great deal if you can get that right now. If you're going with a used vehicle, which boy, those prices are disgusting. They have dropped so much. You can find good deals, but the interest rates are not that great. So here's what I would do. If you are a cash buyer, buy used all day long. The deals are out there. If you are a financer going for a used vehicle, be very selective and maybe wait up to 3 to 6 more months. But just know, the car market has collapsed and the deals are there.
Here's what collapsed actually means. Banks were lending 125% of a car's value, not 100%, not 110%. Asterisk 125% asterisk. They finance the car, the taxes, the fees, the warranties, everything. Which means you drove off the lot already $10,000 underwater. That's not lending, that's a trap. And now those loans are defaulting at 2009 levels. People are 60-90 days late. Some haven't paid in 6 months and still have the car, because repo companies can't keep up. This is predatory lending, plain and simple. And the people who took those loans, they're not failing because they're irresponsible. They're failing because the system was designed to make them fail. Your car is a melting ice cube. It depreciates the second you buy it. And if you financed at inflated pandemic prices, you're drowning.
The car market is about to crash. Around 85% of all new cars were financed as of 2019. And the total American auto loan debt amount skyrocketed from $1.37 trillion to $1.42 trillion this year. And here's where it started getting scary. Lenders have started lending up to 125% of LTV. That means they're paying for your entire car and all the fees associated with it. So the second you drive that car off the lot, you are underwater. Now, investors are banking that people will continue to make these payments. But if everyone is that far underwater and inflation keeps rising, will they?
The car market is collapsing. I follow economics kind of loosely because I find it fascinating, and I've been running into articles recently about the car market, basically saying that new car prices and used car prices are down, I think around 30% for used cars. And this is just kind of a mirror image of the inflation we saw in car prices during the pandemic. Car loans are at a super high payment right now. The average payment is about $700, and I think it's about 30% of people who have a payment above $1,000. Again, check my numbers on this. Anybody who likes numbers, I'm not as much of a numbers person. The percentage of people 60 days late on their car loan rose to 5.6%, which is double the rate it was last year at this time. It's also at a higher rate than the default rate was in 2009. What happened is that lending standards for cars became super relaxed during the pandemic in order to encourage people to spend money. And what happened is they were really just taking money out of the future because that economic activity didn't really exist. People were buying cars when they probably wouldn't have.
Exactly. Economic activity that didn't really exist. That's the whole scam. Pandemic demand wasn't real. It was artificial, fueled by stimulus checks and people stuck at home clicking buy now on Carvana. And automakers saw an opportunity. Chip shortage? Sure, but also record profits. You don't make record profits during a shortage unless you're choosing to keep supply low and prices high. The used car market was even worse. People paid new car prices for 3-year-old vehicles because of the shortage. No, there was manufactured scarcity and a population with too much credit. Now those same people are trying to trade in, and their 2021 Silverado they paid $55,000 for, worth $30,000. Maybe.
And the new car market kind of had this story that they could lean on of like, oh, chip shortage, which who knows if that's true. They're saying the same thing about groceries. They're like, oh, it's inflation, record profits, thank you. And apparently new car sellers sold half the amount of cars that they normally do yet made record profits. The used car market became very hot because the new car market was apparently there was low inventory, or that's what the story was. And so a lot of people went to used cars. And what happened, because you had all these cars bought at a unnaturally high price, both used and new, now that the prices have gone down, a lot of people are underwater on their car loans. And so they can't sell the car to get out of the loan because the car's not worth that. This is the same system of factors that we saw in 2008 with the housing crisis. The only difference this time is that we don't have a whole system of derivatives set up on the car market, although apparently banks do sell back and forth car loans just like they do with mortgages. Oh, also, Carvana lost 70% of its stock price, and I believe CarMax has lost 30% in the last 6 months. So if you are in the market to buy a car, I would suggest you wait until the second quarter of 2023 until the most recent metrics have come out, because probably car prices are going to be in free fall. And yeah, I don't usually talk about economic stuff because I'm uncomfortable citing statistics, so you let me know if I got any of that wrong.
Now, I do firmly believe that we are heading toward a car market crash here in 2025, with trucks being the lead offenders of it all. We have astronomical price tags for all trucks across the board, and it's just really gotten out of reach for your modern American, right? These price tags here, they're just out of this world. Many of them $80,000 to $100,000. No thank you. When you combine that with the fact that we are seeing record high levels of credit card debt, record high auto loan delinquencies, we're talking 30, 60-day, and 90-day auto loan delinquencies, something has got to give, and something's got to give soon.
$482 billion in unrealized losses. That's not oops, we miscalculated. That's systemic failure. Banks are sitting on loans they know are going bad, but they can't write them off yet because it would destroy their balance sheets. So what happens? They tighten lending, raise rates, deny applications, which is why 1 in 5 loans gets rejected now. And trucks? Worst offenders. $80,000 F-250s that people use to commute to office jobs. Now they're making $1,200 monthly payments on something that's lost 40% of its value in 2 years. Credit card debt is at record highs. Auto delinquencies match 2009 levels, and we're not even in an official recession yet.
U.S. banks have just reported $482 billion of unrealized losses. I sell cars for a living, and from my end, this is what's going on. Basically, people bought all these cars during COVID that they can't afford. They bought a bunch of houses they can't afford. Now everyone's insurance is going through the roof. Everyone's property taxes are going up, so their mortgage is going up. So now they can't afford the houses. The houses are being foreclosed on. The cars are being repoed. And not to mention all these EVs that people leased because the government was pushing them on us with the tax credits and the incentives to lease them during 2020, 2021, 2022, and up until last year. Now a lot of these leases are coming to an end, and people are so upside down on them. Say you lease a car, it's $50,000. Your residual when the lease is up after 3 years is $35,000, and that's what your payoff is, or what you could buy the car out. Now these cars that the residuals are $35,000 on them, these people are turning them in. Now the bank owns them for $35,000. At auction, they're only worth 20 grand. And a lot of times now these banks are offering us dealers to buy these cars at less than residual. Say the residual on the car is 35 grand. These banks are offering to sell them to us for 25 grand so that they don't have to take possession of them and then send them to auction and only get 20 grand for them. But we don't want them because they're only worth 20 grand, so we're not going to take them in for 25 grand. People are turning them in at the end of the leases, and then the banks are taking them back, and they're taking major losses. This is basically what everyone said was going to happen from day one from COVID.
This EV situation is pure irony. The government pushed electric vehicles hard. Tax credits, lease incentives, rebates. People thought, I can get this $60,000 Tesla for $400 a month? Sure, but nobody thought about resale value. 3 years later, that Tesla with a $35,000 residual, worth $20,000 at auction. Banks own them for $35,000, can auction them for $20,000, or offload to dealers for $25,000 to minimize losses, but dealers won't take them either, because they know they're only worth $20,000. Meanwhile, the people who leased, they're walking away. No ownership, no equity, just 3 years of payments into the void. This is what happens when policy drives markets instead of actual demand. You get a bubble, then it pops, and taxpayers eat the loss.
Whenever they told us that they were going to shut down the economy.
In case you don't watch the news, We are in the midst of the worst car market crash we've probably ever seen. And if you're going to go buy a vehicle right now, there's 3 things that I need you to do to make sure that you don't get taken advantage of by the dealer. Thing number 1, I need you to go over to cargurus.com and pick the make, the year, the model of the vehicle that you want. Find the one that's been on the lot for 60 days or more. That's step number 1. Step number 2 is you're going to ask that dealer once you get there if they're a volume dealership or an independent dealership. Now, the odds are that they're a volume dealership, and what that means for you is that dealer doesn't give a crap about the price of the vehicle. All they care about is getting those vehicles off the lot. You're going to have so much more room to negotiate. You are going to get thousands off of MSRP on that vehicle. Now, step number 3 is your financing. Get a pre-approval. Get one from your credit union or from a bank, your personal bank, or the manufacturer financing directly. Don't work with the dealer. Work with the manufacturer directly. And here's the reason why. Because dealers will try and gaslight you and manipulate you into thinking that you need a down payment. You don't need a down payment. I have not put a down payment on a vehicle since I was 18 years old. I am now 44. Unless your credit is absolutely in the trash, you do not need a down payment. Get a pre-approval, because once that lender says you're pre-approved for X amount, they're not going to ask you for a down payment. They're going to give you the full financing for the vehicle that you want.
This is solid advice. Car gurus find cars sitting 60+ days. Dealers hate aging inventory. It costs them money every day. The longer it sits, the more motivated they are to sell. You have leverage. Volume dealerships care about moving units, not maximum profit. They'd rather sell at a smaller margin and hit quotas. Use that. And pre-approval, critical. Do not let the dealer control your financing. They'll upsell you, add points to your rate, pressure you into a down payment you don't need. If your credit is decent, you don't need a down payment. That's a lie to get your cash up front. Show up pre-approved, you're only negotiating price. Much stronger position.
The car market is finally crashing. Here's 5 things you need to know about it. Number 1, now is not a great time to buy. Now is an okay time to buy, but you're better off waiting another 6 months or so. Car prices are finally plummeting after 5 years, but I believe they're going to come down even more. So wait another 6 months or so before you go out and buy your new car. Number 2, if you're looking to sell your used car, now is a great time to sell it. Used car prices are through the roof right now for cars under $10,000. So if you're looking to sell your car private party, you can expect to get a good amount of money for it. That is, of course, if it doesn't have 500,000 miles and is a rust bucket. But if it's a decent car, you can expect to get some decent money for it. Number 3, dealerships are willing to negotiate more now than ever before. As consumers, we have wringed the necks of these dealerships for the past 5 years by just not buying their vehicles or their inventory, and they're getting desperate at this point. That's why you're seeing prices come down. So if you can go in and buy a car, you can definitely negotiate quite a few $1,000s off. A lot of these dealerships are on the brink of closure because they can't pay for all this inventory on their lots anymore, and they're getting desperate to sell. So they want to sell inventory, they want to sell you a vehicle, and they will negotiate. Number 4, if you're in the market for an EV, now is also a great time to buy. The popularity trend for EVs has plummeted in the last 2 years, and they're not selling like they were expected to. So dealerships are dropping the prices on EVs like crazy. They're trying to get rid of them. So if you are interested in an EV, you can expect to get a good price on one today. Resale value, on the other hand, for EVs are outrageously bad. So if you're looking to sell your EV, don't expect to get top dollar for it. But if you're planning on keeping it long term, you can get a great price buying a used one. Number 5, interest rates for used cars are still pretty high. They're averaging about 7.5%, but they have come down about 1 to 2% over the last 2 or 3 years. So you can expect a downward trend on car interest rates in the next year to 2 years as well. So if you want to wait even a bit longer than 6 months, maybe a year, you can expect to get maybe a 5 to 6% interest rate rather than the 7.5% average today.
Should you buy now? No. Wait 6 months, maybe a year. Prices are falling, but they're not done. Inventory is piling up. Repos are flooding the market. Lenders are tightening standards, which means fewer buyers, which means more pressure on dealers. Selling a used car under $10,000? Yeah, now's good. That market's hot because people are downsizing. But buying? Hold. Interest rates are still 7.5% average for used cars. Wait until they hit 5 to 6% and you'll save thousands. EVs? If you want one long-term, deals are solid. But understand resale is garbage. You're not investing. You're buying a depreciating appliance. Don't expect to sell it in 5 years and get anything close to what you paid.
Right now, the auto industry is flashing some major warning signs on the U.S. economy and where things are at right now. It's basically a real car market crash that we are facing, which seems to be right in line with the housing market, actually. It's so interesting, the parallels that the car market have with the housing market. I mean, the similarities are quite stunning. We're seeing automakers being squeezed by tariffs right now. We have seen a subprime auto lender collapse, and a lot of car dealerships are warning that consumers are pulling back. Like, for example, CarMax chief executive Bill Nash, he told analysts that the consumer has been distressed for a little while, and I think there's some angst. No, really? He also said that consumers with better credit profiles seem to be sitting on the sidelines, which is kind of a little hint that people who are smart with money right now are kind of just sitting on the sidelines with everything, not just with buying a car, but with investing, with buying real estate, you name it. People who are smart with their cash are sitting back and taking a wait and see approach to see where this economy goes in the next 12 to 24 months, because a lot of people probably think that things are going to continue to get worse, and that is a very safe bet considering the direction things are going right now. Ford said this week that it's offering lower interest rates to buyers with the weakest acceptable credit histories as it tries to sell their unsold F-150 pickup trucks. Honda said it was scrapping an electric Acura SUV after just one model year, and other brands are offering steep discounts on EVs to capture buyers before a federal tax credit expires next week. Tricolor, which is a subprime auto lender and car dealer owner, they all of a sudden filed for bankruptcy liquidation earlier this month because of government investigations and because of alleged fraud. And this company, what they used to do is they used to offer financing to customers who didn't have any credit history or they didn't have a social security number, and they operated 65 dealerships nationwide. So pretty big company, actually. Sounds like they catered highly to the illegal immigration crowd, and businesses suddenly dried up.
Tricolor, a subprime lender that gave loans to anyone who could fog a mirror, just filed bankruptcy, and they were under investigation for fraud. Shocking. When your entire business model is lending to people who can't qualify for traditional financing, you're not making smart loans. You're making bets, hoping enough people pay to cover the ones who don't. But when the economy tightens, those loans default fast. CarMax profits are tanking from delinquencies on 2022 to 2023 loans. First Brands, a major auto parts supplier, is filing bankruptcy with $6 billion in debt. This isn't isolated. This is cascading failure. And here's the tell. Smart money is sitting on the sidelines. People with good credit aren't buying. They're waiting because they see where this is going.
First Brands, which is a major auto parts supplier, they make things like oil filters and windshield wipers. They're preparing to file for bankruptcy protection, and they have more than $6 billion with a B in outstanding debt right now. CarMax is also having problems. They have about 250 dealerships nationwide, and their profits have been sinking recently, particularly in their finance department, because of increased delinquencies. Apparently, a lot of the loans that were written back in 2022 and 2023 by CarMax are going delinquent, and they're seeing some major losses. And this made their stock price go down by double digits recently.
Your car is crashing your finances. A recent study came out saying that 1 in 4 car owners in the United States of America are upside down on their auto loans. What this means is the loan they took out on the car is higher than what the car is actually worth if they decided to trade it in or sell it. It's not like they're upside down on their loans just $1,000 or $2,000. On average, Americans are upside down on their loans by $7,000, meaning that if they tried to sell their cars today, they would be losing $7,000 in the negative. If you're in this situation, I can tell you what you should do in a second, but the first thing is understanding why this is happening. When people were buying their cars a few years ago, interest rates were super low. With that, prices went up a lot. Now, interest rates have skyrocketed, which mean that prices have gone down, and people who took loans out on those higher priced cars are now owning vehicles that have depreciated significantly. In other words, people took out loans to buy cars during a car market bubble, and then the market crashed. In this situation, it's so important to pay down your auto debt because that is a high interest rate debt that's going to keep you handcuffed financially. So pay it down, don't trade in your car yet, and just ride the car until the wheels fall off. When interest rates go down, refinance so that you have smaller payments and things are more manageable. And for more news that makes you money, go over and give me a follow.
1 in 4 car owners is underwater. Average negative equity $7,000. That's not a statistic. That's a crisis. People bought at the worst possible time. 2020 to 2022. Interest rates were low. Prices were sky high. They thought, I can afford a $50,000 car at 2.9%! But they didn't think about what happens when rates spike, prices crash, and their $50,000 car is suddenly worth $30,000. Now they're stuck. Can't sell without writing a $7,000 check. Can't trade in without rolling negative equity into a new loan, making it worse. So what do? Ride it out. Pay down the loan fast. Don't trade in. Don't take on more debt. Drive it until you own it. And if rates drop, refinance. But don't go deeper trying to fix this.
The car market has collapsed. If you've been waiting to buy a car, this info is for you. Right now, we have the most repossessions we've ever seen in U.S. history. 1 in 5 loans do not get approved. The average American has $7,200 of negative equity, and the car dealerships are getting wrecked. So, it was smart to be patient. If you've been wanting to upgrade to a new car, or if you need a secondary vehicle, there's 2 things you need to look out for here. See, dealers in 2021 and 2022, they were able to get away with these prices because they had good, low interest rates. We don't have that right now. However, if you're looking for a new vehicle, there are a lot of manufacturers that are offering 0% or up to 1.9%. That's a great deal if you can get that right now. If you're going with a used vehicle, which boy, those prices are disgusting. They have dropped so much. You can find good deals, but the interest rates are not that great. So here's what I would do. If you are a cash buyer, buy used all day long. The deals are out there. If you are a financer going for a used vehicle, be very selective and maybe wait up to 3 to 6 more months. But just know, the car market has collapsed.
I don't think you have any idea how bad it is here on these streets. It's so bad that repos are at an all-time high. They are so awful that there's not enough tow trucks on the road to get these vehicles. I mean, there is people that haven't made a payment in almost 6 months and they still have their vehicles. That should tell you how bad things are. But the good news is because of that, this car market crash, you're seeing discounts up to 40% off. That's absolutely bonkers. I'm seeing vehicles like Jeep, Ram, GMC, Nissan, Kia, and unfortunately Subaru. Subaru is struggling to sell the WRX and the Ascent. These dealerships are begging people again. Ford is knocked off tens of thousands of dollars off the F-150, off the Bronco, and the beloved Toyota, their reliability has went downhill since 2022. Toyota's reliability has went to trash. They are struggling to sell the Tundra, the Tacoma, the new 4Runner, and the new Land Cruiser. Is now the time to buy?
Final take. Not yet. Repos are at all-time highs, discounts hitting 40% off. Ford, Jeep, Ram, even Toyota, which used to be bulletproof, can't move inventory. When Toyota struggles to sell trucks, the market is broken. It's going to get worse before it gets better. More repos mean more inventory. More inventory means lower prices. Lower prices mean desperate dealers. And desperate dealers make deals. If you're patient, if you can wait 6 months to a year, you'll get an insane deal. 40 to 50% off MSRP. Financing at 3 to 4% if rates keep dropping. But if you need a car now, cash buy used, don't finance. Find a reliable used car under $10,000, pay cash, drive it until this shakes out. Because people financing $60,000 trucks now will be the next wave of negative equity horror stories. Markets don't lie, they correct. And when they do, the people who over-leveraged and overestimated their ability to afford something, they get crushed. The car market crash of 2025 was predictable, it was avoidable, and for people who saw it coming, it's an opportunity, but for everyone else, it's an expensive education in the difference between asterisk can afford asterisk and asterisk can make the payment asterisk. If you're underwater, pay it down, ride it out. If you're thinking about buying, wait, be patient, let the market come to you. Drop a comment below. Are you buying, selling, or waiting it out? If this helped, hit that like button, share it with someone thinking about buying a car, and subscribe. This market's got a long way to fall, and we'll be here breaking it all down. See you in the next one.